Hello everyone, my name is John here with Pokemon Department Stores, and today we're going to be going over a topic that is for both sellers and consumers. The video is primarily for sellers, however, almost anyone who buys online should know about this. We're going to break down sales and use tax for you, what it is, how it works, take a quick look at sales and use tax in different states. So let's get started. A little bit about me is that I'm a controller type of accountant for a 9-figure company. I run my own bookkeeping and tax business on the side for about 3 years now. I am an accountant. I'm not your accountant. I highly recommend talking to your local enrolled agent, CPA, or business accountant, as each state has different laws, and do not take this to be the truth for your situation. The point of this video is to break down a tough subject so you can have a better understanding to talk with your own accountant and just for your own. So what exactly is sales tax? Sales tax is a tax that is imposed by the state or local government on the sale of goods or service. Basically, it's a percentage added to the price of items when you make a purchase. These taxes are typically collected by the seller and remitted in the state that they have nexus in. For example, let's say you're buying $100 worth of Pokemon product. The sales tax is 8%, so the total would be $108. Make sense? Use tax is similar. If you purchase an item from another state, say online, and you didn't pay sales tax, you may still owe use tax when you file your taxes. It's essentially a way for states to make sure that they collect taxes on the goods purchased outside of their state. Use tax is designed to prevent people from avoiding sales tax by buying from out-of-state vendors. So if you buy a booster box from a website that doesn't charge sales tax in your state, you may still owe the state tax when you file your return. Nexus is a term used to describe a connection between a business and state or local government that triggers the requirements to collect and remit sales tax. It is the minimum threshold of activity that a business must have in a state before it's obligated to collect and remit sales. So the confusing thing about sales tax, each state can and does set its own sales tax rate, and some don't have any at all. So here's a quick look on some of the states' differences throughout the country. So California, you live in California, you're looking at a sales tax of 7.25%, which can be higher in some areas due to local taxes. That means that if you buy a product in California, you might pay more depending on where you live. This is determined by cities and counties. However, not every state imposes sales tax. Delaware, Montana, New Hampshire, and Oregon do not have state sales tax levels. So if you're shopping in those states, you won't be paying sales tax. States like Florida and Texas have sales tax rates around 6 to 7%, while New York and Illinois have close to 8 to 9%. Alaska doesn't have sales tax, however. Some local jurisdictions do. So double check the area you're selling to. As in Alaska, so some cities have different sales tax rates that pile on top of the state's sales tax. Example, in Chicago, the total sales tax rate is 10.25%, including the state and local taxes. But traveling a few miles out of Chicago, rates can be as low as 6.25%. So again, always be aware of your local variations. If you're a business owner, you're responsible for collecting the right amount of sales tax from your customer and remitting to the state. But that can get tricky if you're selling in multiple states. With online sales booming, businesses need to keep track of the sales tax and rate in everywhere they have customers. And if you don't collect the right amount, you don't collect tax at all. You might face penalties or audits. Use tax. This is for buyers, mostly. So use tax is a type of tax that you might owe when you purchase a good or service from an out-of-state seller, and that seller doesn't charge you sales tax. The key here is that it applies to items bought from online stores, catalogs, or even remote vendors that don't collect sales tax. If you buy a product from a website that doesn't charge you sales tax, you may still owe what's called use tax to your state. It's essentially the state's way of ensuring they collect sales tax on goods purchased outside the state, even if the seller isn't required to collect sales tax themselves. So sellers that don't break the nexus won't have to collect sales tax in their state. However, the state doesn't want to see that money leave without getting taxed. So because of that, you bought an item out of state, they would be getting a use tax. And since the nexus hasn't been passed for the seller and they're not doing sales tax, you owe use tax. So how you pay use tax in most cases is reported when you file your annual tax return. So let's say you've bought a few booster boxes on a website that didn't include sales tax. When you file your tax return, you typically find a section to report use tax and you put the purchase there. The state usually asks for a total amount of out-of-state purchase you made, and you calculate how much use tax you owe based on the purchase price. Usually not super complicated, and most states just offer a flat use tax rate for every small item, as long as it's not a big pain in your car, essentially. So what kind of online purchases trigger use tax? Pretty much any tangible item you buy online could be subject to use tax if it's from an out-of-state seller who doesn't charge sales tax. That could include electronics, furniture, clothing, books, or even collectibles like Pokemon cards. Even if you buy something from a marketplace like eBay or Etsy, if the seller is out of state, use tax may still apply. So as a buyer on eBay, if you see that you aren't being charged sales tax, you want to record that purchase somewhere so end of year you have something to look back on and show how much you have to report. So how does the state even know you owe use tax? In most cases, they just rely on you as the taxpayer to report your purchase. However, some states are cracking down on this as there being a lot more online sales. States are going to try and get their tax money. So just keep that in mind. It's the law, but they rely on you to report it. So it's your responsibility if you pay these taxes. If you live in a state that doesn't collect sales tax, you are off the hook for paying use tax. But definitely be aware of the states you're in, that you shop online. So when you purchase, calculating all your deals. Back to the businesses, nexuses. This is a pretty simple thing that a lot of people just don't have enough information about. So a nexus in the world of taxes, nexus refers to a business connection between states that triggers the obligation to collect sales tax from customers in the state. So in simple terms, if a business has a nexus in that state, they're required to charge, collect, and remit sales tax to that state. Now, when it comes to online purchases, the concept of nexus is crucial. A lot of people think that businesses only need to collect taxes in states that they live in or have a physical presence in, but thanks to the internet, that's not the way it is anymore. Before 2018, only businesses with physical presence in a state, like a warehouse, office, or employees, were required to collect sales tax for that state. But then the South Dakota versus Wayfair case, which changed the game. Now, as a business, even if you don't have a physical presence or physical store, you may still be triggering some nexus requirements. So make sure you're checking up if you think you have a lot of sales in a certain place. So under economic nexus, not physical nexus, if an online retailer makes a certain amount of sales or a certain number of transactions in a state, they're required to collect and remit sales tax, even if they don't have physical presence there. So each state has its own threshold, which is also kind of confusing. For example, some states, it's just if you pass 100,000 or you have 200 sales. So again, if you're noticing a lot of transactions in a certain state, maybe take a look at that state's requirements and see if you're passing it. I'll make sure to include down below a really good website that kind of walks you through the thresholds for each state. So yeah, just always know the rules of the state you're selling in. For eBay sellers, you might still have to collect and remit sales tax. So a lot of states have laws now where market facilitators, aka eBay, Amazon, Etsy, have to remit this sales tax for you, so you don't have to do it. But just keep in mind, if you're making sales, to make sure that they are collecting. If they're collecting the sales tax for the state, then they are remitting it for you. You don't have to worry. But just double check when you're making sales that that's happening, or else you're on the hook for remitting. For sellers on Shopify, there's some cool tax softwares that you can upload. If you guys are interested in that, let me know and I can put together some good sites that just integrate directly into Spotify or Shopify and Square. So the main takeaways as a seller is be mindful of your Nexus laws, look into software that can help you with Nexuses, talk to your local accountant, and make sure you are up to date on everything correctly so Uncle Sam doesn't smack that audit hammer down on you. As buyers, the main takeaway is to know your own state's use laws. And keep in mind when buying from someone online, at the end of the day, states haven't cracked down super hard on use tax. However, it is a law to report your own use tax, so keep that in mind when making purchases. I hope this video was helpful and it clarifies some confusing tax concepts. If you found this video helpful, Please subscribe, leave a like, comment, and maybe I'll make some more online accounting videos. So have a great day.